this week, and of course to discuss together the inflation, the post-inflation sentiment, from the after the UK reported earnings, reported inflation, this morning, with a very, very strong number out there, but also just 20 minutes away from the retail sales in US and the inflation in Canada. So just 9 minutes away. I will show you the numbers later on. So we're gonna keep so we're gonna have a look together the results. I would like, since you're here, my dear Emma and dear Claire, can you let me know whether the sound is good? Because I'm from home, from my laptop, so it will be a bit difficult today. I will try my best at least. Hi to everyone. Hi Garabo. Hi Kaitzir. So feel free to ask anything you want. Of course, feel free to let me know which assets you want me to cover. So in the meantime, until you post which assets you want me to cover, until we see the releases later on, let me share the S&P 500, okay? The stock. So because it's a really, we've seen a lot of volatility lately. It was the inflation results. It is the tension that we keep having from Russia and Ukraine. Is the inflation this morning? So in general, we are actually, I don't see myself. Okay, here it is. So I need to brief you a bit of what's going on. So what's going on? We have seen the stocks being to the upside, to be crept to the upside, as you can see from this S&P 500 1-hour chart. So let me zoom in a bit. This is the 1-hour chart. Topped higher today, even though it's overall into a consolidation mode since yesterday. So you can see this range, but in general, this is a daily chart. We have seen a bit of a boost yesterday, and that was due to the fact that yields were lower. So the government bonds have been under pressure. That's why global stocks have found temporarily or some limited ground for now. So the safe haven assets, such as government bonds, have been seen under pressure. Okay, that's why we've seen these books on stocks. So here I have S&P 500. I have Dow Jones over here. So this is Nasdaq. And if I have FTSE, you can see FTSE that it topped over here this morning on the release on the European session release. So why is that? It's because of two things. It's because of the situation with Russia and Ukraine. So we had some positive, I could say, news headlines. We have seen the Russian pulling back troops from the UK borders. So that calmed down a bit the markets. So the markets were looking for a sign that one of the deepest crises in East and West relationships for decades is starting to ebb. And with this pullback from Russia, they have calmed down a bit, even though that nothing is certain, of course, but that calmed down a bit the tension, and that's why we have seen a bit of a shift away from the safe haven government bonds, a bit of a lead to stocks. Okay. Also, other than that, we have seen, as I said, so that was how the session started. But also the attention today is on inflation and remains on inflation. We have seen, other than this geopolitical situation, uncertainty, we have seen a pretty high inflation this time from UK. So following EU, following US, following Chinese inflation. Now it was the time of UK also posting a high inflation at 30 years highs. So if I put FTSE over here, or pound, let me put FTSE, we can see, let me zoom in as well. No, I cannot zoom in further apparently. Can you see that? Yes, you can. Yes, sounds is good. Thank you for the feedback, guys. So yeah, we have seen this is the FTSE UK 100. Otherwise, oops, I lost my mouse. Yeah, on this, on that was this morning. You see that? So at 10 o'clock it was on the release of the inflation, and because the inflation posted the inflation once it was released, it was at 30 years high. That means, guys, that the banks have not yet managed to control the inflation, this overinflation that we have. So implies that they need to take further actions, right? So it implies that they have to get more hawkish on what was expected. So that's why you need to monitor the data. So today's number, like US inflation last week, added to the worries of more hawkish stance from central banks. Okay, so the numbers today have actually now turned the markets into a possible 50 points rate hike by March. Okay, so remember, it's something similar to what we have seen last week from US. Okay, so that's why we have seen initially this boost on stocks on this announcement. Afterwards, however, we have seen a decline. So you can see this decline, right? So this is because we keep having the doubts around Ukraine and Russia situation, which looks to ease a bit, but it looks that Russian troops have turned to base. However, we keep having headlines from that side. So the concerns, the fear is still there, and that's why the stock rally has faded quickly, and we have seen a pullback. We have seen a similar pullback in other assets, such as US ones. So this is the Nasdaq, this is S&P 500. So after the UK inflation, we have seen a pullback again on the concerns over Russia once again. And because we have seen a cyber attack, I'm not sure whether you are aware of it, but there was a cyber attack on Ukraine, something that has added to worries. And regardless of the report that some Russian troops are returning. So yeah, that's why there is a lot of limited movements. By the way, I need to stop in that point. I think I covered the important news, and I need to get back to share with you. There is sorry, I need to share with you the calendar so we can see the data, because they are already out. So here we have retail sales spiking higher, much higher. So guys, oh my god, that's a really good number. So regardless of inflation, it seems that retail sales managed to grow significantly without excluding autos or with autos, generally the retail sales in US, they have just posted a really strong growth in January. You can see that it was expected at 0.1%. That's the retail sales control group. It came out at 4.18%. So that's a very strong reading. Also, the excluding autos, we had another significant growth at 3.3% from 0.8% expected, and from the contraction that we have seen last month, the same stat. So the overall reading, the headline for January is at 3.8%. So a very strong release from US right now. And let me see also the Canadian inflation. Canadian inflation 0.9% in a monthly basis, with the core at 0.8% and the headline at 5.1%. Unfortunately, higher inflation from Canada as well. After US, after EU, after UK, after China, we're seeing the inflation rising higher in Canada as well. Canada was the very first bank that actually proceeded with tightening. So it seems that they also need to do more. Okay, so what you understand from that, guys? What we understand, actually, I'm not going to ask you because then we will delay everything. So what we understand is that central banks, and not solely Bank of England, not solely Fed, not solely RBA, they have to proceed to tightening. Sorry. So except ECB, which is unlikely to change anything for the time being, but since no significant growth has been seen, but from the other economies such as US and Canada, we're still seeing economy growing. Really sorry. So we still see economy growing, retail sales higher, imports higher, GDP higher, and jobs market in US more precisely growing. Okay, in UK is a bit tight. So these are reasons for the banks to proceed as soon as possible. So I'm getting back to MT4. Okay, so we could see together any possible reaction, even though it's a bit muted so far as I can see over here. So here is the dollar index. I will put the 30 minutes chart for you. We have seen initially, not sure how visible that is, but let me just. Okay, so zoom, I cannot zoom in, but we can see over here that it spiked to 95, nearly 96 level, but there is some kind of a pressure, still a bit of indecision of what's going on, even though the data were good. So that theoretically should have support the dollar. Okay, so imports rose, exports rose, expectations actually the outcome exceeded expectations. So the results should have supported the dollar, but sorry. So we're not seeing right now this kind of reaction yet, but it is what it is. So we're seeing a flip lower instead. That's the 1 hour chart, I remind you. So we need to be a bit patient for this candle to close, to see, just to avoid this noise of the market, and see whether it will keep keep consolidating or sustain a move within the high 95 level. So very good news, but because there is a bit of a muted reaction, I will go quickly to dollar CAD since we had Canadian data out there as well, and we can discuss it later on when the noise will be out of the market. So this is dollar CAD. Dollar CAD, it seems that is extending declines. Is extending declines on the announcement. This looks a bit bizarre, I will say. So it looks like the missed, the disappointing, the actually the fact that actually it's not disappointing, but having in mind that inflation came higher in Canada as well, also implies that Bank of Canada should proceed to further rate hikes, right? As soon as possible. So similar with what happened this morning with the UK, we are seeing the Canadian dollar on the anticipation of more rate hikes from Bank of Canada, tightening as soon as possible from the central banks. We are seeing on the anticipation of this, we are seeing the Canadian dollar being on bid against the US dollar. So why is that? It's something that we keep seeing for the last, I will not say 2 years, I will say a year. For the last year, we are seeing markets pricing in events, so ahead of time. So because of the high inflation, now the markets have increased the odds of a rate hike from Bank of Canada as well. So rate hikes, okay, higher rates support the country's currency. By pricing in ahead of time, so before it actually happens, we are getting stronger Canadian dollar against the US dollar. That's why the dollar CAD is slipping, because Canadian dollar, after the data, has found further support from the data and has extended gains against the US dollar. So that's a decline that we have seen since yesterday afternoon. And as you can see, Bollingers keep extending lower. The asset has managed to broken this immediate support level that we have seen for the last 4 hours. So Bollinger expanding lower. Fast MA is also expanding lower and pointing lower. So we can see this 20 exponential moving average bearishly crossed with the 200 moving average. Now is bearishly crossed. And they all point lower if you can see them. Let me check these questions as well. Yeah, so sorry guys that I haven't started with gold, but it's Canadian date. It was a US session. We had Canadian data and US data, so I want to start it with dollar CAD. So extending decline, MACD remains negative, RSI flirting with the 30 barrier with further steam to the downside. And if I zoom out a bit, I would like to show you that it is back to where it has been on the 11th of February. So 11th of February is Friday, how it closed this session, at the bottom of Friday's bottom more precisely. So you understand that, first of all, is retesting that immediate support level. So a fall below that level, let me also add a rectangle. So here we are. So that was the immediate support level, which has broken already. So you understand that a flip below that area, below the 126 should be the tails are over here, 126.65 126.63. I will round it up. 126.60. Let's round it up. 126.60. A break of that level could open the doors to last week's bottom and the 126 lows. So down to 126.40 and even 126.35. So, sorry. So that is due to the growing inflation in the US, but because we already also have a growing economy based on the US retail sales, this move might be limited. So you need to be a bit patient, okay? 30 minutes chart, you can see broken the immediate support, MACD extends lower, RSI doesn't look oversold, so there is further steam to the downside. So in the very near short term, in the short term, dollar CAD is under pressure. Now, just in the medium term, I would like to show you the daily chart because the asset is consolidating around the 20-day moving average. So you need to keep an eye tonight, once the daily candle closes. You need to keep an eye on how it will close, on whether it will manage to sustain a move above the 20-day moving average or whether it will broke it and close below that. Okay, so as I mentioned, 126.60, 126.35 immediate support areas. 126.35 is also coincides with 200-day moving average, while on the break of that level, we could see the asset turning down to 125.80 level, the 61.8 Fibonacci level. So, yeah, so what else about dollar CAD? Dollar CAD, it was in a lot of uncertainty lately due to the, other than the data, due to the geopolitical situation as well, because you know that it's correlated with oil, and this tension between the two countries and the possibility of a supply disruption from Russia into EU, it was something that added a lot of fear, the fear of supply to oil, and that's why we have seen oil extending and getting expensive. So because the dollar CAD was also in a downwards trajectory due to the higher oil prices as well. So let's flip to gold, since you kind of adore gold, so I will not skip it. Here we are. Sorry guys, let me zoom in a bit, starting from the daily chart. Checking the good afternoon to everyone. Good afternoon, Omun. Also, Sebastian asked about gold. Okay, so gold is a safe haven. I said that several times. So you understand that the reason why we've seen gold spiking was the development, the tension since last week to the Ukraine borders. The reason, however, why we have seen it pulling back yesterday, significantly back, it was on this easing of tensions that I mentioned earlier. So the fact that troops were back is something that calmed down the market, is something that make the overall market sentiment becoming a bit more circumspect. So that's something that underpinned demand for gold. But also have in mind that since yields have been seen like I've been seeing a bit slightly lower, actually stabilized a bit this week. And we also seen data from Canada, EU, UK, US backing expectations for gradual tightening. Okay, this is something that could ease a bit the demand of gold. Okay, because tightening in central banks policies, higher rates, okay, imply that gold, the store value of gold will detract it. So it won't be an attractive um, um, asset anymore, because the government bonds will benefit from the rate hikes. So as long as we keep getting data that point to that backing actually the expectations of gradual tightening, not solely from US but from the globe, then the less attractive the gold will be. That's why we've seen this pullback yesterday on the European data, and that's why so far today we haven't seen, even though we have seen a bit of a improvement, we don't have seen a significant rebound, but more or less we've seen a bit of a sideways movement for gold. Okay, but so it's a bit tricky. The fundamentals are not supporting gold, and this is something that we said several times. Okay, but and that's maybe something that is responsible for this correction that we have got, because overall the fundamentals for 2022 are not on the favor of gold. But what is keeping a lid on gold is the is Russia and Ukraine. So as soon as we don't have something certain, either a diplomatic path from them stating that they start talking and doing a more diplomatic way, either the ease of tensions, so Russia to go away from the Ukraine borders, etc. As long as we have not something certain in regards to geopolitics, the gold will remain supported by geopolitical tension. Okay, so fundamentals are not supporting them, but this near-term uncertainty supports them. So why I'm saying that? Because the near-term outlook, based on the politics, boosts gold. The long-term outlook is negative for gold. So for the time being, this is the rally that we have seen since the end of January. Okay, so from the 1770 boosted to 1878. So I will put my Fibonacci level on, make it a bit thicker because I'm not sure whether you can see it. Okay, so it had a recovery, a pullback, like consolidating at 23.6 Fibonacci level, and remains and the previous resistance seen at the top of the at the peak of January at 1853 level. So this is something that you should keep an eye on, okay? Because further pull, especially below 1840, could imply to the retest of 20-day moving average at 1825 or even the 1818 level. Okay, so that's overall. Because, however, the momentum indicators are not supporting a pullback of gold. Okay, not anytime soon, at least. So momentum indicators along with the near-term uncertainty support keep gold supported. Now, 1 hour chart. As I said, it was consolidating a bit so far today. To be more precise, it's in a narrow upward trend without, however, recovering significantly from yesterday's decline. So this is yesterday's down leg. So we have seen that is retesting the 38.2 Fibonacci level since yesterday. If I put also my range, oops, wrong tool. Okay, put the range on. You can see that this is in an upwards range, rebounded. So next, if I get rid of the Fibonacci, you can see that this boost, the next resistance level could be seen at 1861. It's a big hourly boost. Of course, we have another 8 minutes before this candle closes, but it has rebounded away from the lower channel, breaking the middle line. So the next resistance area is at the upper trend line of the channel at 1860. So this is the next resistance level to the upside for gold, because it has been seen since yesterday afternoon in an upwards near term, in the short term channel, up channel in the short term. So yeah, a nice strong so far candle, which we need to wait until it closes. So let me check the 30 minutes chart with you guys to see whether it is a strong move. So unfortunately, it doesn't seem like it. MACD is 0. RSI, however, RSI is pointing higher, but Bollingers are narrow along with the moving averages, so we might be a limited move. So in any case, the upper line of the channel, it could give you an immediate resistance at 1860, okay? So we might continue seeing these ups and downs within the channel. So put the channel on your charts as well. I think it will help you. And also, let me put my 55 and 9 exponential moving average, my very short time frame, so you can see that. Cannot zoom in further, but 5 and 9 exponential moving average are clashed, so I don't have an indication of whether they are pointing further to the upside or to the downside. So for the moment, the only thing that I have is this, is this upwards channel with the asset rebounding away from it, crossing the middle line, and the next resistance area being at the 1860. So, and because the momentum is very neutral, we might keep seeing this consolidation, so these ups and downs, but within the channel, okay? CAD yen. Where's my CAD yen? So, CAD yen. So, yeah, on the stronger, sorry for that. So it seems that we have okay, can you see that? So the asset is following an uptrend, not uptrend, since for the whole week actually. So let me zoom out a bit. So appreciated and recovered more than 50%. Let me just, this is the 1 hour chart, sorry, more than 50% of the dive that we have seen in February. So managed to recover more than 70% since this dive. Okay, so I will get rid of that. for now. We'll get rid of the Fibonacci. I want to, so, okay, we have some kind of a ascending triangle, sorry. On the announcement, on the data, we have seen actually, even though we have seen the Canadian dollar benefiting against the US dollar, we have seen, however, the Canadian dollar declining against yen. So this might be, let me just double check something. So it seems that the safe haven yen is getting a bit stronger. So we have seen a pullback, maybe just a correction though, pullback at 91. So, but MACD remains positive. RSI, however, shows that rebound, even though, let me just, it's good to use trend lines, guys. It helps you identifying, as we keep saying, entry points and etc. So a pullback on RSI, pullback on the price action. However, momentum remains positive. The 20 and the 20-day period moving average surge in 1 hour chart keeps pointing higher. And if I just put the intraday setup, so here we are. So, sorry for that. So in the near term, it looks that there is some kind of a slowdown, a pullback. With, however, we don't have a confirmation from the fast moving average, my 5 and 9 exponential moving average. So this might be, or it looks like, a correction before another rebound. Why is that? Because fast moving average have slipped lower, but they haven't barely crossed, so they don't give us a sign. MACD is still positive, implying that the bulls are still in control. And the only one that it flips lower but not crossed the 50 area yet, RSI, so points lower but haven't crossed lower. So in my very short time frame, stochastic, it's pointing lower. So for now, this pullback looks a bit limited, looks like a correction similar to that one over here or that one over here before another attempt to the upside. Anyway, don't forget that the oil remains positive, supporting the Canadian dollar. And if the market continues to price in rate hikes for Bank of Canada as well, then we can see further appreciation of Canadian dollar. So let me see your questions. Also, we have seen the Canadian manufacturing sector also rising higher. So this looks to be so what else? Let me see your questions. So we have covered CAD yen. So just to summarize, CAD yen to the upside, okay, remains in a positive outlook since it has sustained gains for the last, I should say, for the last, actually it sustains the gains of the past 2 months, okay? So overall positive ground for CAD yen. So you can see that it remains above 90 level for many months now. So positive to neutral to positive outlook in the medium term, while intraday we've seen a correction. We have just seen a breakout, guys, a breakout of the descending triangle. So that's a near-term bearish sign. So we need to search for the next support area. The next support area lies down to the confluence of 50 and 200 exponential moving average, but also on yesterday's bottom at 90.63. So 90.85 and 90.63, or you need three support levels. The Bollinger can also treat it as support levels. So 90.85, 90.72, and 90.63 are the immediate support levels in the very, very short term, in the 30 minutes and 1 hour chart. Okay. Nasdaq. Lenny, I see that you want to withdraw. How you could do that? Actually, requesting from your MyHF area. Okay. Log into your HF area and request for a withdrawal. Okay. So Nasdaq. Where's my Nasdaq? It is a pullback for the last 1, 2, 3, nearly 4 sessions. What we have over here. Sorry. So a pullback 15, 14, 4, 5, 3, 6. So pretty much flirting with yesterday's support. So what we have over here is like a decrease. So we have a declining MACD line. You see that, but it keeps declining. So the histogram is getting lower below the signal line, something that indicates that we are seeing a decreasing bullish bias. So the bulls are getting less than bears. RSI. So let me put the intraday stuff on. Easier for us to see it. Yep. So 1, 2, 3, 4, 5 is the 6th session that is getting down. MACD declines, RSI declines, stochastic entered the oversold territory without an indication of a pullback, but this looks a bit limited. It might already reach to its peak. I mean, it might already this decline might already reach to its end. And why I'm saying that, because RSI, if I zoom in, I cannot flatten already, and my Bollingers are very, very close to each other. So that suggests that this decline ran out of steam, and the asset will enter a range. Okay, so put your lines on the immediate resistance support levels. So only if the 14,520 breaks to the downside, then we could search for support at the previous up fractal. Or if it rebounds, breaking the high of the day, then the next resistance area could be seen at 15,000. Okay, so in the short term, my dear 6 QAP, in the near term, it has stuck into a range with this latest pullback looking a bit limited. If you zoom in and see my fast moving average, they have started pointing to the right hand side as well, so indicating that there is no further decline. The asset might enter a consolidation level. The same stands for RSI, that has flattened. So we might see the asset consolidating a bit. If not, if we see decisive break of this immediate support level, then the next level to be seen is that one on the previous up fractal. Now, if it rebounds and gets higher, breaking the high of the day, then in order to find our next resistance area, our next ceiling, we could, the next ceiling could be either on the on last week's high, or also at the latest up fractal, which coincides a bit with the Bollinger's at 14783. Okay, or using your ATR, that's really up to you. Where do you use Aussie CAD? I'm going to, okay. Aussie CAD, very interesting, cross to the upside so far. We've seen commodities. We said that commodities are benefiting from this geopolitical tension. So since gold is benefiting, is on the upside due to this political tension, then Aussie and Kiwi, which are commodity related assets, are also benefiting. That's why we've seen the Aussie CAD on a rally since for the whole February so far. So the outlook of Aussie CAD, even though it has been in a rally for 2 weeks now, more than 2 weeks now. However, if I zoom in a bit, you can see that it looks a bit sideways the last 5 days. So you need to be a bit careful with it. So a key resistance is this triple high at 0.9120. Let's round it up. Okay, this is the immediate resistance level. And this is the immediate support level at 90.50. So it's consolidating the last 5-6 days in a row, with MACD being neutral, RSI being neutral, so everything pointing to consolidation. But then the weird thing is that the daily Bollingers are keep pointing upwards. So this implies to a near-term consolidation, but a possible extension of the upwards movement in the medium term. So a break of 91.20 could open the doors to 91.65, okay? Because this is a tricky level. The asset is consolidating the last 5-6 days between the 38.2 and 50% retracement level since the down leg that we have seen since the peak of December. So it's a very difficult resistance area. So you understand that if it managed to break the 91.20, so that will mean that it will confirm the breakout of the 50% retracement level. So this implies that could retest the 61.8% or even the high that we have seen last week. Okay, so neutral to bullish daily medium-term outlook. 1 hour outlook now. Let me get rid of it. 1 hour outlook. So light change and it's on my face right now. So yeah, you can see that. Retested. We have something very interesting over here. We have a double top nearly. So retested twice, the 191.15. And return backwards. But we have some very strong declines in the 1 hour chart with fast moving average pointing further to the downside. We have this big body bearish candle with a long tail to the downside, something that implies to further bearish pressure. So further decline according to fast moving average, to the expansion of Bollingers to the downside, to the big down tail and the big bearish candle of the last two candles. the resumption to the downside of stochastic, and the fact that RSI is below 50 for nearly how many hours? For a long time, actually. So, yep. So, negative bias remains the key driver of Aussie CAD in the short term. So, 50 minutes chart. So the latest low at 90.70 remains the immediate support level, while if that breaks, then the next support level for the asset lies down to 90.60 and 90.50 level. Okay, so in the near term, it's under a lot of pressure with 1, 2, 3, 4, 5 consecutive down candles in the 30 minutes chart. Okay, in the daily time frame, it's in a consolidation, so we need to keep an eye on the barriers of the range. Okay, hello Becky, I'm good, thank you. Gold, we've seen gold. For we used to be in the trading view, my dear Usama, but we're not any longer. I'm not sure whether this is in our plans. Dollar yen, of course. So dollar yen. So dollar yen, perfect. So what's going on with dollar yen? Okay, dollar yen was a big shift, and why is that? It's because the halving demand. You see, big, nice catch, guys. So yeah, the halving demand is actually boosting yen against dollar. Okay, so why is that? The surge in retail sales, the rise in imports and exports. So that has boosted the halving demand, more precisely in treasuries, and something that added pressure on dollar. Okay. Also, we have some news as well. The Secretary of State Blinken said that he has seen no evidence of a Russian troops pullback. So that bringing back the fear, bringing back the tension. So on the data during the release of US retail sales, we have seen yields jumping higher, but weekly retreated. Okay, with equity market declining. So we have seen Nasdaq turning down, we have seen dollar turning down. Okay, so that's why yen is now in demand. Okay, so oops, sorry for that, I forgot to so what I was telling you, yeah. So on the so yen on demand, as I said. So breaking the 50 and 200 period moving average in this 1 hour chart, down to 115.40 territory, with fast moving average pointing further to the downside, RSI at 38, stochastic still pointing further to the downside. So there is a pullback on dollar yen, with the next support level being at the, let me just put my Fibonacci as well on. This will help us. So, okay, perfect. Here we are. We're right now. So the next support level is at 115.26. So that's a big candle with the asset looking oversold because it closed outside Bollinger's, but because the Bollingers are keep expanding lower, the fast moving averages are keep pointing lower. momentum indicator remains weak, then we might see further decline or a potential retest of 115.26. That's in the very short time frame. This is my 30 minutes chart as well. Very strong bearish candle breaking all this support that we have seen for the whole day, actually since yesterday, extending lower. It might consolidate a bit because it's oversold, but overall we've seen that the asset got under pressure. So next support level 115.26. Now in the daily chart, the asset remains above in the upper Bollinger Band level for many days now. So you should keep an eye on your Fibonacci levels, because this will help you setting resistance and support levels. On a breakout of the 115.26, we could see a retest of 115 or even 114.90 territory, which is a 50% retracement level, but also our latest daily fractal and the 20-day moving average. So this is a very strong support level for dollar yen if it turns lower. However, in the medium term, the asset remains to the upside. You can see MACD extending, RSI sustaining above 50. So in the long term, in the medium term, dollar yen is well supported, posting higher highs since the beginning of the year and higher lows. So as long as it doesn't get below the 115.20, confirming a close below it, it could continue extending higher in the medium term within this range. In the short term right now, it's in a increasing pressure so far. So next level to be seen at 115.26. I'm checking daily, then I'm going down to 1 hour and the 30 minutes there. So we've seen. Okay, so let's have another look on gold. And if you don't have any further questions, I could call it a day, guys. So let's get back to gold. So gold request from Facebook as well. Oh, euro dollar on Facebook as well. Okay, let's see a euro dollar, pound yen, and let's finish with gold then, because there were some requests from Facebook as well. So let's get back to euro dollar. And it seems that the safe haven demand that boosted the U.S. Treasuries, it has added a pressure on the dollar once again, regardless of the growth that we have seen in the retail sales earlier. Guys, unfortunately, it's a bit tricky times, because it is not necessary. The market is not affected only by the data, but it seems that it has been dominated by central banks, but also by the continuous headlines that we keep having. So the fact that right now, even though the US retail sales show growth, however, we have also some news from Secretary of State Blinken said that I don't see any evidence of Russian troop pullback. That brings back to it resumes the fear. So you need to be very careful. Nonetheless, the fact that we had a really strong import prices from US, export prices from US, retail sales in general, beating expectations significantly is something that, let me put the dollar as well, is something that not significantly, but is something that supported for now the dollar. So let's get to euro dollar, sorry. And but not against all the majors. So we've seen the safe haven demand that has boosted treasuries. supporting the dollar against euro, but the dollar remains weak against yen, okay, and remains weak against the CAD as well, okay, and in general, so we've seen dollar, sorry, okay, here we are. So euro dollar reversing. So 1, 2, 3 hours in a row to the downside, crossing the 50-day moving average. And look at that. Look at that. We have a bearish cross of fast moving average, bearish cross of 5 below the 9. So that's an indication that the decline could continue further with the support level at the bottom of the Bollingers over here, coinciding with the 50 period moving average. So 113.37, our key support level on this pullback of euro dollar, with stochastic suggesting that there is further steam to the downside. RSI keep pointing lower at 47. MACD losing some steam, but yeah, let's see the 30 minutes chart. So down, 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 down. So that is a increasing decline, increasing bearish pressure. So yeah, that was in regards to a 1 hour chart. Okay. So 113.37, the key support level. With bearish cross over here, break of 20 period moving average, declining momentum indicator supporting this pullback. The long term, however, in the medium term, however, nothing is really in the benefit of euro. Okay, so nothing is from fundamental perspective at least. Okay. We've seen pound yen, if I'm not mistaken, no? Sideways the last 2 weeks, consolidating between the 20-day moving average and the upper Bollinger. However, in an upwards overall trajectory, but this level, this double top over here, 157.70, it's a key resistance level for the asset. So as long as we don't see a break above it or a decisive pullback, we might see the asset keep moving within this range or that one. Okay, so it's a bit of a neutral. We need a clearer picture for CAD yen in the medium term. Intraday right now, I said that we have a strong dollar, but we also have a strong yen. That's why pound yen is on the flip side, already touched the lower Bollinger Band area. So with moving averages bearishly cross, so we might see some further pressure, even though the stochastic already start eased a bit, RSI start pointing higher, so this might run out of steam already. In case that we see a rebound, okay, actually I'm going to post over here. In case that it fails to extend lower, we might see a rebound and a retest of 157 again, because you can see that everything it has calmed down right now. Bollingers are flat. RSI start slowly to try to get back to 50. Stochastic flatten as well. So this was a limited pullback with the asset in a ranging market between 156.34 and 157. And let's finish with gold. 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 As I mentioned, geopolitics support gold, but in the medium term, the overall outlook is negative due to the fundamentals and the higher rates that we are anticipating from central banks. So we mentioned that. So, guys, earlier, so we've seen this rebound, but not a significant one that could cover the actually it right now has broken and retested again the 1858-59 area, which is also the 38.2 Fibonacci level. So retest once again this resistance area. However, there is a lack of momentum. Can you see that? MACD is 0, RSI is at 55 flat. So there is a lack of momentum, a lack of direction. We might see this boost, but we need more. Bollingers are close to each other. So there is a lack of direction. There is a fear. There is contractory headlines, I'm afraid. So in the near term, as long as we don't see a break of that area that I have just pointed, a breakout above it could retest these Fibonacci levels up to 1865. Even though the momentum indicators and the technicals point to further consolidation between 1850 and 1860 area. Okay, so yeah, you might. Sorry, you see in 30 minutes chart is completely flat. MACD RSI the same, ranging between 1850 and 1860. Bollingers are narrow, fast moving averages are pointing to the left hand side. So a lot of consolidation in the near term for gold. In the daily chart though, as long as it sustains a move above 1850, further the expectations are to continue extending higher because momentum in the medium term is strong. As long as we see the asset holding above 1850, then there might be furthest into the upside. So neutral intraday, bullish in the medium term. Let me see for any final questions. Unfortunately, guys, I cannot help a lot today because there is a lot of uncertainty in the market, a lot of ranging ranges, a lot of consolidation areas because, okay, it was the data, of course. It was these conflicting and messy headlines from Russia and US and Ukraine. So and of course and yeah, it was this conflicting headlines from the one side we have some positive US data, from the other side we have a higher inflation from UK and Canada suggesting further rate hikes. From the other side we keep having headlines with the politicians playing with us mainly because Russia, Ukraine says otherwise, US saying something else, and the markets are trying to catch up with everything. So that's why you need to put some stop losses over there. You need to have your risk management before deciding to enter because there is a lot of volatility, I'm afraid, and a lot of plays from politicians. So yeah, I might not be that helpful today, but I say what I see. So yeah, up to you mainly. Yeah, so that was from me, guys. If there are no further questions, I will call it a date. What I'm missing? Am I missing something? So overall, what we are seeing so far, okay, it's that dollar got some actually appreciated on the data because the data were good, but because of the tension again in Russia, that was some kind of a limited gain. On the flip side, because of this uncertainty we are seeing yen gaining, so yen on beat, gold and the dollar under pressure. What else? Commodities and commodity related. Oh, that was gold, guys. Okay, I'm glad that I shifted it right now. So it managed to break that area that I was just talking you about, and already it's back at 1860. So the next resistance area is at 1866. So something happened apparently. Let me find out. Blinken, we continue to see Russian units moving towards borders, not away. So it's the geopolitics. It's the geopolitics. The geopolitics. The tension supports gold, supports commodity-related assets such as Aussie, Kiwi, it should support it against Canadian dollar as well. So unfortunately, is the geopolitics. So the market has really ignored the data and turned the attention back to Russia and Ukraine. It seems that the US politicians are trying to spread the fear. That's why we've seen gold on bid back, on bid again, and dollar under pressure. And possibly oil should have seen some up. Okay, so yeah, so oil is back in demand again. Actually, it's the fear of supply disruption. So tension keeps gold up, keeps oil up, keeps commodities under pressure, keeps dollar under pressure, and keeps demand on yen, which is a safe haven. Okay. So unfortunately, this is what happened just now. I have seen a headline stating that the US, Blinken, the US secretary, said that they are seeing the Russian units moving again back in the borders, not away. So politics, I'm afraid. This is just it, is the politics. So I will call it a day. Take care, risk management, especially now with the tension in the borders. Keep your stop losses closer, right? Keep your enemies close, we said, and keep your friends closer, your enemies closer. Keep your friends close and your enemies closer. So this is my something like that. So risk management, set your stop loss in a distance that you can have a reasonable risk and reward ratio and risk percentage that you can afford. Okay, so have a great day ahead, guys. Hopefully the session helped you, and we're gonna have another weekly ramp up with Stuart on Friday. Really important to check the Friday candles, the weekly candles, to see how they end up, because this will give you clues for the rest of the month as well. Okay, so have a great day ahead, and I'll see you again on Friday. Bye bye.